You don't need to be a millionaire, have a finance degree, or come from a wealthy family to start investing. The world of investing is no longer reserved for the elite or those with insider knowledge. In fact, the face of investing is changing, and it looks a lot more like you and me. You don't have to work on Wall Street or wear a suit and tie to get started. Everyday people, from students to parents to young professionals, are taking control of their financial futures right from their living rooms. The old days of high fees, intimidating brokers, and exclusive investment clubs are over. Investing used to feel like a secret society, but now the doors are wide open for everyone. Today, all you need is a smartphone, an internet connection, and as little as $100 to begin. With just a few taps, you can own a piece of the world's biggest companies. The myth that investing is only for the wealthy keeps too many people on the sidelines, watching others build wealth while they wait for the right time or enough money. But the truth is, you don't have to wait. Thanks to technology, the playing field has been leveled. Now, anyone can buy stocks, ETFs, or funds with zero commission fees. The barriers that once kept people out are gone. The tools and resources that were once reserved for the rich are now available to everyone. User-friendly apps, educational videos, and real-time data put the power of investing in your hands. Real investing isn't about gambling on quick wins or chasing the next big thing. It's about slow, steady growth, letting your money work for you over months and years, not just days. When you buy a small piece of great companies, you're planting seeds for your future. Even small investments can grow over time, thanks to the power of compounding. The wealthy have always put their money to work, letting it grow while they sleep. Now you can do the same, no matter your background or starting point. Starting with just $100 might not seem like much, but it's the foundation for bigger investments later. Every journey begins with a single step, and every portfolio starts with that first deposit. The most important step is simply to start. Don't let fear or uncertainty hold you back. The sooner you begin, the more time your money has to grow. The financial world is open to you now. Walk through the door with confidence. You belong here just as much as anyone else. Your future doesn't care how much you start with, only that you take action. Every dollar invested is a step toward your goals, your dreams, and your financial freedom. So take that first step. Investing is for you, for your family, and for your future. The journey starts now, and it's open to everyone. Inflation is a silent thief, quietly eroding the value of your hard-earned money without you even noticing. Every year, the cost of everyday items, like groceries, gas, and even your morning coffee, creeps up, while the money in your wallet buys you less and less. This means that if you simply let your cash sit around, its purchasing power is slowly slipping away. What you could buy for $100 today might only get you $90 worth of goods in a few years. Even if you keep your money in a traditional savings account, the interest you earn is usually much lower than the rate of inflation. So, while your balance might look the same or grow just a little, its real value is actually shrinking. That's why investing is so important. By putting your money into assets like stocks, bonds, or index funds, you give it a chance to grow faster than inflation. Investing isn't just for the wealthy or financial experts, it's for anyone who wants to protect and build their future. Historically, the stock market has averaged about 10% returns per year, far outpacing the average inflation rate. This means that over time your money can actually increase in value, not just keep up. Even starting with just $100 can make a difference. Thanks to the power of compounding, small investments can snowball into much larger sums if you give them enough time to grow. On the other hand, if you hide your $100 under your mattress or stash it away in a drawer, it's guaranteed to lose value as prices rise. That same bill will buy you less and less each year. But when you invest, your money works for you. Compounding means your earnings start to earn their own earnings, creating a snowball effect that can turn a small sum into something much bigger over time. Think of compound interest as a snowball rolling down a hill. At first it's small, but as it keeps rolling, it picks up more snow and grows faster and faster. The earlier you start, the bigger your snowball can become. So the real question isn't whether you can afford to invest, but whether you can afford not to. Every day you wait, you're missing out on potential growth and letting inflation chip away at your savings. Time is one of your most valuable assets. The longer your money sits idle, the more it loses to inflation. But the sooner you start investing, the more you can take advantage of growth and compounding. Think of your $100 as a seed. If you plant it by investing, you give it the chance to grow into something much bigger, a tree that can bear fruit for years to come. Don't let your money sit idle and shrink away. Every dollar you invest is a step toward financial security and freedom. The clock is ticking. Don't wait for the perfect moment. Start now and make your money work for you. Your future self will thank you for taking action today. You won't get rich from a single $100 investment. The real value is building the habit of investing. Like going to the gym, the first step is about creating a routine, not instant results. Set up your account, make your first trade, and prove to yourself you can do it. Consistency is what makes investors successful, not luck or timing. Dollar cost averaging means investing regularly, no matter what the market is doing. Start with $100 now, and keep adding what you can each month. Don't obsess over short-term gains or losses. The amount matters less than the habit. You're building financial muscle memory for life. The first $100 is just the first rep. Wealth comes from showing up month after month. Where should you put your $100? For most beginners, a low-cost index fund is the answer. Index funds let you own a piece of hundreds of companies in one simple purchase. For example, an S&P 500 index fund includes Apple, Microsoft, Amazon, and many more. Diversification protects you. If one company fails, it barely affects your investment. Index funds are passive, so you don't need to research or pick stocks. Low fees mean more of your money stays invested. Look for a broad market index fund like a total stock market or S&P 500 fund. You're betting on the long-term growth of the economy. Don't overcomplicate it. Start simple and be consistent. Let the market do the heavy lifting. Index funds are the smartest, easiest way to begin investing. Imagine getting paid just for owning a piece of a company. That's what dividends are. Many big, stable companies pay dividends, creating passive income for investors. Even small dividend payments can be reinvested to buy more shares, compounding your returns. Over time, this snowball effect can significantly grow your wealth. You don't need to pick individual stocks. Many index funds include dividend-paying companies. Set your account to automatically reinvest dividends for maximum growth. Dividend reinvesting is a simple, hands-off way to build wealth. Bitcoin and crypto offer huge potential and huge risk. Prices can swing wildly, and there's a real chance your investment could go to zero. The golden rule: never invest more than you're willing to lose. For beginners, consider putting just 1.5% of your portfolio into crypto. Think of it as a lottery ticket, exciting, but not your main strategy. Buy a tiny amount through trusted apps, then focus the rest on safer investments. Don't check prices daily or panic sell. Treat crypto as a small, long-term bet, not your core investment. For stability, add a small slice of real estate or gold to your portfolio. REITs let you invest in real estate without buying property. Just buy shares like a stock. REITs pay out most of their income as dividends, offering passive income. Gold is a classic safe haven, and you can invest through a gold ETF. With $100, consider putting $5 or $10 into a REIT or gold ETF for diversification. This helps balance your portfolio and smooth out market ups and downs. Even small amounts can build a solid, resilient foundation. New investors face common traps. Here's how to avoid them. Emotional investing leads to panic selling and FOMO buying. Ignore the noise. Don't try to time the market. Nobody can do it consistently. Use dollar cost averaging. Invest a set amount regularly, no matter what. High fees eat away at your returns. Choose low-cost index funds. Always check expense ratios before investing. Don't put all your money into one hot stock. Diversify with index funds. Diversification protects you from disaster if one company fails. Stick to your plan, keep costs low, and stay diversified. Control your emotions, avoid high fees, and diversify. These habits put you ahead of most new investors. The best time to start investing was yesterday. The second best is today. It's easy to look back and wish you'd begun sooner, but the real power lies in taking action now. Every day you wait is a missed opportunity for your money to grow and work for you. Don't let hesitation or fear of making mistakes hold you back. The journey to financial security starts with a single step, and that step can be taken right now, no matter your age or experience. Time is your most powerful ally. The earlier you start, the more your money can grow. Just like a tiny seed planted in fertile soil, your investments need time to take root and flourish. The magic of compounding means that even small amounts, given enough years, can turn into something truly significant. Imagine your money quietly multiplying in the background, growing stronger with each passing year, all because you gave it the gift of time. Consistency is key. Invest small amounts regularly through good times and bad. It's not about timing the market perfectly, but about building a habit that lasts. By setting aside a little each month, you create a powerful routine that can weather any storm. Even when the news is scary or the markets are down, sticking to your plan will help you stay on track and avoid emotional decisions that can hurt your long-term growth. Market ups and downs are normal. Keep investing anyway. The stock market will always have its highs and lows, but history shows that those who stay the course and keep investing come out ahead. Don't let short-term volatility shake your confidence. Remember, investing is a marathon, not a sprint. Staying calm and consistent through the roller coaster of the market is what separates successful investors from the rest. If you invest $100 a month at 8% returns, you could have over $349,000 in 40 years. That's the power of patience and persistence. It might not seem like much at first, but over decades, those small contributions add up to a life-changing sum. Imagine opening your account years from now and seeing how your steady efforts have paid off. The numbers may surprise you, and you'll be glad you started when you did. Most of that growth comes from compounding, not your own contributions. Compounding is like a snowball rolling down a hill. It starts small, but as it gathers more snow, it grows faster and faster. Your money earns returns, and then those returns earn even more returns. Over time, this effect accelerates, making your investment grow far beyond what you put in yourself. It's the secret weapon of every successful investor. Start with $100, open a brokerage account, and put most of it in a low-cost index fund. You don't need to be an expert or have a lot of money to begin. Index funds are simple, diversified, and have low fees, making them a great choice for beginners and experienced investors alike. Taking that first step is the most important part. Don't overthink it, just get started. Add a little to a REIT or gold ETF, and maybe a tiny bit to Bitcoin. Diversifying your investments helps protect you from risk and gives you exposure to different opportunities. Real estate, gold, and even a small amount of cryptocurrency can add balance to your portfolio. Just remember, the bulk of your money should stay in broad, reliable investments. Set up automatic transfers for next month, even if it's just $25. Automating your investments takes the guesswork out of the process and helps you stay consistent. Even small amounts invested regularly can make a big difference over time. The important thing is to keep moving forward, no matter how modest your contributions may seem. Let time and consistency do the work. Trust the process and allow your investments to grow quietly in the background. Over the years, you'll see the results of your discipline and patience. The combination of time and regular investing is a powerful force that can transform your financial future. You're now an investor. Welcome to the club. By taking these steps, you've joined millions of others who are building wealth for their future. Celebrate this milestone and know that you're on the right path. Investing isn't just for the wealthy or the experts, it's for anyone willing to start and stick with it. Your future self will thank you for starting today. Years from now, you'll look back and be grateful for the decision you made. The habits you build now will pay off in ways you can't yet imagine. So take that first step, stay consistent, and let time work its magic. Your journey to financial freedom begins